Ever wish you had, a shortcut to understanding a company's real financial health without wading through pages and pages of dense reports? Well, you're in luck today. We're diving headfirst into the unaudited consolidated financial results for Affle 3i Limited. This is for their first quarter, ending June 30th, 2025. So, our mission for this deep dive, it's simple, really. We take the official press release, the detailed financial presentation, the board meeting stuff, and we distill all of that down, find the most important insights, maybe some surprising bits, and figure out what it all actually means for you, the learner. Think of it like your express lane to being really informed.
Exactly. And just to set the stage a bit for you, Affle 3i Limited, you might remember them as Affle India. Limited before the name change, they're a global tech company. Their whole focus is on consumer intelligence, using AI solutions, mainly in mobile advertising. So this deep dive will really peel back the layers, show you how they deliver performance, how they drive value with their, the unique approach in this digital world that keeps changing so fast.
Okay, let's unpack this then. Affle 3i Limited, with this new name, they've just put out their Q1 FY2026 results. And yeah, the initial numbers, they look pretty robust, more than just headlines. What are the standout figures from this quarter that really caught your eye?
Right. Well, looking at the consolidated performance for Q1 FY 2026, there's some impressive momentum here. Their revenue from operations hit INR 620.7 crore. Now, for listeners maybe less familiar, a crore is 10 million, so that's 6.2 billion Indian rupees. That's a solid 19.5% increase year over year from last year. And interestingly, also a 3.1% sequential growth just from the previous quarter, Q4 FY 2025.
Okay, so growth on both fronts.
Yeah, exactly. But what's really compelling, I think, is the efficiency. Look at the EBITDA earnings before interest, taxes, depreciation, and amortization, a key measure of operational profitability. It jumped to INR 139.7 crore. That's a pretty significant 33.7% year-over-year increase.
Wow.
Yeah, and their EBITDA margin, that expanded nicely too. It rose to 22.5% this quarter, up from 20.1% this time last year, and even up a bit from 22.2% last quarter.
So they're making more profit on each rupee of revenue.
That's the gist of it. And profit before tax from operations, if you exclude other income, saw a really remarkable 37.6% year-over-year increase. That landed at INR 112.2 crore. And then the bottom line, profit after tax, or PT, came in at INR 105.5 crore. That's up 21.8% year-over-year, giving them a PAT margin of 16.5%.
Okay, so strong growth across the board there.
Definitely. And what's also notable is the strong underlying momentum in their main business model. That's the cost per converted user, or CPCU model. They delivered 10.7 crore converted users. That's 107 million users who took a desired action for the advertiser. That figure itself is up 17.8% year-over-year. And the revenue specifically from that CPCU model reached INR 620.0 crore, up nearly 20%, 19.8% year-over-year.
Right. And that certainly sounds like an ambitious start to what the company's chairperson, MD and CEO, Anuj Khanna, he called it the first quarter of their third decade as Affle 3i Limited. He specifically mentioned this being a transformative era of intelligence-led growth. And he sounded, well, the release said, elated about hitting their highest ever quarterly revenue, EBITDA, PAT, and CPCU conversions. That's more than just commentary, isn't it? It feels like a declaration of intent for this next phase.
It really does. And what's fascinating here is understanding how they're actually pulling off this kind of consistent growth. Because it doesn't seem accidental. It looks remarkably broad-based.
Yeah.
Coming from both India and their international markets. And it's all anchored really firmly on that unique CPCU business model we just talked about.
So how does that model and their tech work exactly?
Well, Affle's core, it really revolves around enabling these AI-led solutions within mobile advertising. The goal is basically to optimize how ads target people, personalize the engagement with users, and crucially maximize the return on investment, the ROI, for their clients. And they do this by combining their own proprietary data, deep audience insights, and this is key now, cutting-edge generative AI capabilities.
Yeah.
It's about moving beyond just simple automation to truly intelligent, measurable advertising experiences.
Right. And here's where I think it gets really interesting. The CEO talks quite a bit about strategic investments and deep AI integration. Can you give us some specific, maybe concrete examples of this actually in action?
Yeah.
How does their tech translate into, a real-world advantage?
Precisely. That's the important part. So one key strategic initiative they've been pushing is their Optics AI. Think of this as their next-generation AI engine. It's designed to, generate thousands of hyper-contextual ad creatives visuals, messages in real time and at scale.
Hyper-contextual, so really tailored to the moment.
Yes, exactly. Tailored to the moment, the user, the context. This massively amplifies marketing effectiveness. And another thing, they also recently became an Apple certified partner, which honestly is a huge deal in the mobile ad space. This really strengthens their credentials for delivering advertising that's privacy first, but still drives ROI on iOS devices.
Which is crucial with Apple's privacy changes.
Absolutely vital. And for context, this fits perfectly with what they call the intelligence pillar of their 3i vision. It's all about driving smarter growth and deeper impact, especially in an ecosystem that's, well, increasingly focused on user privacy.
Makes sense. What about where this growth is coming from geographically?
Yeah, looking at the geographic breakdown, the growth is impressively balanced. India and other emerging markets, they account for the majority, about 72.3% of their revenue. And that segment showed healthy 18.1% year-over-year growth. But developed markets, well, a smaller slice at 27.7% of revenue, actually saw even faster growth, 23.3% year-over-year. That suggests they're getting strong traction in mature markets, too.
Interesting. So they've managed strong growth across both emerging and developed markets at the same time. Does that balance maybe contribute to their overall resilience? And it's really compelling to see that statistic. 99.9% of revenue from contracts with customers contributed by CPCU model in Q1 FY 2026. That really underlines, well, an almost single-minded focus on that business model.
It absolutely contributes to resilience, yes. It diversifies the risk profile quite effectively. And that strong CPCU focus, it's backed by some solid tech credentials, too. I mean, they currently reach 3.7 billion connected devices globally.
3.7 billion. That's a huge reach.
It is. And they hold 36 unique patents, 14 already granted, 22 filed and still pending. Plus, they have advanced solutions like their MFAS platform.
MFAS. What's that?
Right. It stands for Mobile Fraud as a Service. It's their system for real-time ad fraud detection. In the digital ad world, fraud is a massive headache. Fake clicks, bot traffic, things like that. So MFAS is essentially their digital bodyguard, protecting their clients' ad budgets and making sure they only pay for genuine user engagement.
Got it. That sounds pretty crucial.
It really is. And they also boast accreditations like the Data Protection Trust Mark and ISO 2701.2022. Now, these aren't just, badges to put on a website. They signify a rigorous commitment to data security and privacy, which builds crucial trust with clients, especially now when data breaches are such a major concern. It's definitely a key differentiator for them.
Okay, so we've seen the impressive numbers, the tech behind it all, the focus, but what does this actually mean for, say, actual companies and their customers on the ground? The numbers are one thing, but can we see how Affle's tech translates into tangible results, like in the real world?
Yeah, absolutely. This is where it really comes to life, I think. Let's look at 3 pretty powerful case studies that were in the source material. They really illustrate the impact.
Great.
Okay, first up, Swiggy Instamart in India. They do grocery quick commerce. Their objective was clear: maximize their presence, drive transactions, especially among high-value iOS users. They were aiming for category leadership in what's a really competitive market.
Right. Quick commerce is tough.
Very. So Affle solutions included smart, event-led scaling, like ramping up activity during Valentine's Day or the big IPL cricket season. They used custom product pages combined with that optics AI we talked about for more contextual storytelling. And they employed automation and intelligence for real-time bid and budget optimization.
And the results?
Pretty impressive. Comparing Q1 this year to Q4 last year, they saw roughly 50% quarterly growth in order volume.
50%, quarter and quarter.
Yep, and over 10% growth in quarterly new user onboards. Plus, a significant improvement in overall campaign efficiency. So more orders, more new users, and better spending.
Okay, that's a strong one. What's next?
Next, let's jump to Latin America. Naranja X, a digital bank, specifically in Argentina. Their objective was to acquire high-value users, not just people who download the app, but users who would actually open and actively use bank accounts and financial services.
So quality over just quantity.
Precisely. Affle implemented what they called privacy-first performance using Apple's SAM 4.0 framework. That's for targeting idealist iOS audiences.
Scan. That's Apple's privacy thing, right? Measures ad performance without tracking individuals.
Exactly right. Absolutely vital in today's privacy-focused world. They combined that with a comprehensive A/B-tested creative strategy and used advanced machine learning models for predictive spend allocation.
Okay, sophisticated stuff.
Yeah.
Did it work?
The numbers suggest it did. They saw a stunning 120% growth in new users comparing June 2025 to March 2025. a 127% increase in actual account openings between March and April 2025, and over 90,000 new accounts opened in just 5 months, from February to June.
Wow, those are huge percentage gains.
They really are. Okay, third one. Pick n Pay in South Africa. They're a big multi-channel retailer with a popular grocery app. Their aim was simpler but still critical: drive quality users and boost those crucial first-time purchases.
Getting that first purchase is key.
Absolutely. So Affle's solutions involved a comprehensive keyword strategy. They used their GenAI multilingual keyword recommendation tool focusing on the local vernacular with about 100 high-performing keywords. And they worked on strategic brand keyword leadership, just making sure Pick n Pay was highly visible when people searched for relevant terms.
Makes sense. And the outcome?
The results really speak volumes here. A 55% increase in return on ad spend, or ROAS.
55% ROAS lift. That's significant.
It's the kind of result every marketing team dreams of, basically. They also achieved the #1 paid visibility rank in the Africa region for their category, and delivered a 73% average conversion rate within the quarter, April to June 2025.
Okay, 3 very different businesses, different regions, but seems like strong results across the board.
That's the takeaway. It shows the adaptability of their platform and model. Now, shifting gears slightly, let's look at their financial foundation. The consolidated balance sheet as of June 30, 2025. It shows total assets at INR 37,170 million. A pretty substantial chunk of that, INR 15,033 million, is held in cash and liquid investments. That indicates a healthy liquidity position, plenty of cash on hand.
Always good to see.
Indeed. Goodwill and intangibles make up another big piece, INR 13,398 million. That often reflects value from past acquisitions they've made. And procedurally, the board of directors officially approved these results back on July 26, 2025. That was after a limited review by their external auditors, Walker Chandiok & Co., LLP.
Right, the standard process.
Yes. But digging just a little deeper into the auditor's report, there are a few interesting footnotes that add some important context. The fine print.
Well, I always read the footnotes. What did they say?
Well, the auditors noted they didn't conduct a full review of the interim financials for 4 international subsidiaries. These subsidiaries combined had significant revenues. They also didn't review one smaller subsidiary deemed not material.
Okay. Is that unusual or concerning?
It's actually quite common for multinational companies operating across different regions with potentially different accounting standards and timelines. It speaks to the complexity. But critically, the auditors did review the process management used to convert those subsidiary financials into Indian GAAP, basically, translating them into a common accounting language. So while the raw local data wasn't fully audited yet, the consolidation process was reviewed, which provides a necessary layer of assurance.
Okay, that makes more sense. What else?
The report also gives an update on how they're using funds raised from a prior qualified institutional placement, a QIP. That's essentially when they sold shares to big investors. They noted there are still remaining invested balances from that raise. And perhaps the most strategically interesting note, their investment in a company called Talent Unlimited Online Services Private Limited, which operates as Bobble. It's been classified as held for sale since May 2024. Apparently, due to some pending inspection rights issues, this 24.07% stake has a carrying value on their books of about INR 1,346 million.
Held for sale. So
Yeah.
they're planning to sell their stake in Bubble.
That's usually what held for sale signals, yes. It suggests a strategic intent to divest that asset, maybe to sharpen their focus on the core mobile advertising tech, or perhaps free up capital for other opportunities. It's definitely a strategic pivot worth watching, not just an accounting detail.
Right. And all of this performance, these strategic moves, the strong financials, it clearly underpins what the CEO called their 10x growth vision for the third decade. It really seems like they're laying significant groundwork for that long-term expansion, not just focusing on short-term quarterly results.
Absolutely. The ambition is clear.
So, okay, to wrap up our deep dive today then, we've covered Affle 3i's, genuinely robust Q1 financial performance, driven fundamentally by that strong CPCU model, backed by significant, and it seems intelligent investments in AI and their platform capabilities. And we saw the tangible successes they've demonstrated through those diverse client case studies. Swiggy, Naranja X, Pick n Pay, it paints a compelling picture of a company using its tech strengths to deliver real-world impact.
It really does. And this all raises, I think, an important question for you, the listener, to maybe consider going forward. As AI continues its rapid evolution, especially generative AI like we discussed with Optics AI, how might this deep integration within consumer intelligence platforms actually reshape the whole landscape, digital advertising, user engagement,
Mhm.
maybe even what we've already seen today. What new possibilities or maybe even new challenges does this kind of deep intelligence unlock?
That's a great question. Yeah, definitely something to think about the implications of this increasingly AI-driven marketing, that intersection of technology and consumer behavior. How could it impact your own areas of interest or perhaps your work? Where could this kind of intelligence lead next? And how might it ultimately impact your world? Lots to mull over there.